Gold, a mesmerizing and treasured metal, has left an indelible mark on the course of history. In this video, we embark on a comprehensive journey to explore the profound impact and value of gold throughout the ages. Join us as we delve into the intricate history of gold as money and its role in shaping economies and monetary systems. As we look back to the past, we find ourselves in the ancient world, where gold's allure captivated early civilizations. From the vast plains of Africa to the river valleys of Mesopotamia, humanity marveled at the radiant beauty and scarcity of gold. The discovery of gold's unique properties, its malleability, rarity, and resistance to tarnish, ignited the concept of money. By 600 BC, the ancient kingdom of Lydia in Asia Minor minted the world's first gold coins, known as electrum. These lustrous coins, stamped with intricate designs and standardized weights, revolutionized commerce. The brilliance of the Lydian king's innovation lay in creating a universally accepted medium of exchange, independent of the limitations of barter trade. As the Lydian merchants traversed the ancient trade routes, the mesmerizing gleam of gold coins captured the imagination of distant lands. Trade flourished as traders recognized the intrinsic value of gold coins, ensuring a fair exchange of goods and services. Witness how this monumental development heralded the rise of powerful empires and prosperous societies, as gold-backed economies thrived on the foundations of trust and stability. As we skip ahead several centuries, the allure of gold endured, continuing to weave its magic across the tapestry of human history. From the fabled Silk Road, where camel caravans embarked on arduous journeys across Asia, to the bustling ports of the Mediterranean, where ships carried cargoes of gold and exotic goods, gold continued to facilitate a web of global commerce. The allure of gold coins attracted traders from diverse cultures, uniting East and West, North and South, in a tapestry of exchange. The impact of gold extended beyond the realm of trade. As merchants traversed perilous territories and foreign lands, the lustrous metal assumed spiritual significance. From the magnificent temples of Egypt to the grand halls of ancient Greece, gold adorned sacred altars and statues, symbolizing the divine connection between mortals and gods. Its ethereal radiance stirred beliefs in the immortality of the soul and the eternal power of the heavens. The profound impact of gold in ancient monetary systems fostered a sense of interconnectedness among civilizations, transcending the boundaries of geography and culture. It was more than mere money. It was a conduit for cultural exchange, disseminating art, science, and knowledge across empires. As we journey forward a few more centuries, the dawn of the Middle Ages marked a transformative period in the world of finance. As trade and commerce thrived, the need for secure financial institutions grew. In 1472, the world witnessed the birth of Banca Monte dei Paschi di Siena, one of the oldest surviving banks. This groundbreaking establishment extended loans and offered a safe space for merchants to store their wealth securely. It played a significant role in facilitating trade and commerce during a period of cultural and economic resurgence. Banca Monte dei Paschi di Siena's ingenious financial instrument involved issuing gold-backed banknotes. Each note represented a claim to a specific amount of gold held by the bank, providing merchants with a secure and convenient means of conducting long-distance transactions. This pioneering approach to banking not only fostered economic growth but also laid the groundwork for the evolution of modern banking systems. The emergence of fractional reserve banking further revolutionized the financial landscape. Banks realized they could lend beyond their physical gold reserves, ushering in an era of economic expansion and growth. Yet, this novel system was not without risks. The practice of lending more than the gold held in reserve had the potential to amplify economic fluctuations, creating periods of boom and bust. As the influence of banks grew, so did the need for centralized control. In 1694, the Bank of England, the first modern central bank, was established. Central banks became pivotal players in shaping monetary policies and financial stability. The acquisition of substantial gold reserves became a strategic move to bolster national wealth and ensure fiscal security during times of economic turbulence. As we skip ahead a few more decades, the world is again in turmoil. The start of the 20th century witnessed unprecedented upheavals that would forever change the role of gold in global economics. At the onset of the century, the world experienced a seismic event, World War I. The colossal scale of destruction and economic devastation sent shockwaves through financial markets. Governments faced the challenge of financing the war effort, leading to soaring debts and inflation. As currencies depreciated and economies faltered, the allure of gold as a safe haven asset intensified. Investors sought refuge in the timeless allure of gold, a tangible store of value amidst economic uncertainty. As the world began to recover from the ravages of war, the 1929 stock market crash marked the onset of the Great Depression. The global economy plunged into a severe downturn, leaving millions unemployed and businesses bankrupt. Amidst this financial catastrophe, gold emerged as a symbol of stability. Central banks increased their gold reserves to instill confidence in their economies and currencies. The gold standard, which pegged currencies to gold, offered a sense of assurance to nations grappling with economic turmoil. As the Great Depression abated, the world once again found itself engulfed in the flames of war, World War II. The horrors of global conflict intensified the appeal of gold as a safe haven. Governments and individuals alike sought to secure their wealth in the timeless brilliance of gold, a rare commodity immune to the ravages of war and inflation. As the world emerged from the tumultuous period of World War II, a new era of hope and cooperation dawned. In 1944, world leaders gathered at the historic Bretton Woods Conference. In a remote location in New Hampshire, they endeavored to establish a new international monetary order. The agreement sought to foster cooperation and stability among nations, with the overarching goal of preventing a return to the economic chaos of the interwar period. Under the Bretton Woods system, currencies were pegged to the US dollar, and the US dollar was linked to gold at the fixed rate of $35 per ounce. This approach ensured stable exchange rates, facilitating international trade and investment, and laying the foundation for an era of unprecedented global economic growth. The Bretton Woods system served as a beacon of hope in the aftermath of conflict, promoting economic prosperity and cooperation. Nations embraced the fixed exchange rates as a means of providing stability and certainty to their economies. The establishment of the International Monetary Fund and the World Bank aimed to promote monetary stability and facilitate post-war reconstruction. However, over time, the Bretton Woods system faced challenges. Economic imbalances and the growing US dollar reserves strained the system's sustainability. At the start of the 1970s, the world witnessed a seismic event, the Nixon Shock. In August 1971, the United States decided to suspend the convertibility of the US dollar into gold. This historic event severed the direct link between the dollar and gold, marking the end of the Bretton Woods system. The era of fixed exchange rates dissolved, giving way to the emergence of a new era of floating exchange rates and fiat currencies. The captivating journey through the history of gold has provided valuable insights into the intricate tapestry of human civilization. From its early use as money in ancient economies to its significance in modern finance, gold's allure remains steadfast and timeless. As we contemplate the impact of wars and crises, we recognize gold's enduring status as a safe haven and store of value. The lessons of the past guide us in responsibly navigating the complexities of the future. The dynamic relationship between gold and monetary systems will continue to shape global economics. As we embrace the lessons learned from history, we approach the future with a deeper understanding of the pivotal role gold plays in preserving financial stability and fostering prosperity. Thank you for watching. Make sure to like the video if you enjoyed it and subscribe to the channel for more content like this and financial tips. I'm also continuing development on Cash Crusade, a financial mobile game to educate people around the world on how finances work. Links in the description below.